Hey guys, per usual, everything on this channel is for educational purposes only and not intended as financial advice. So as I've been talking about, this cup and handle looks pretty good. I don't see any possibility of reversal at this point in time. We've cleanly broken this resistance. At the very least, we might see like a support test again of the previous resistance turn support, but I don't really think so based on the size of these candles. Just all sorts of things breaking out on all sorts of time frames, which is good. Again, this is the target. This is the target since we were over here. It hasn't really changed. This is important because as you get into trades, you're going to start getting emotional, and you're going to get super biased and thinking we're going to bajillion dollars, but it's just not going to happen, I don't think. The probability just isn't there. So yeah, the first target, my highest probability target's around 850 on spot. Might be around 920 on quarterly. Again, this is all possible, but the higher this goes, the higher the probability of reversal, but that's like, you know, nothing groundbreaking there. While I'm talking about quarterly real quick, the quarterly contract changes over on the 16th of December. So the current quarterly becomes a bi-weekly, and then it becomes a weekly, and then expires on the 30th. So around that 25th or the 30th, somewhere in there. So around that time, I'm expecting some sort of local top with lots of shenanigans around that open and close of the quarterly, the new quarterly close, or the new quarterly open, old quarterly close. It's going to get wild and woolly just like it did last time. So be cognizant of that and don't, you know, over leverage yourself into oblivion, okay? Now, I'm expecting a pullback on the quarterly open, just as we have had almost every time. That doesn't necessarily mean we'll be perish for the quarter, but if we do have a strong pullback like we did on the last quarterly open before the Bitfinex hack, you can use that as evidence for bearish trending quarterly overall, but we'll see what happens. So the bottom line for this, there's no real reason to be concerned about anything right now. If you're long, you're just holding. I'll show you where my stops are and why they're there, but what's happening is what should be happening. So again, don't be surprised or shocked or freaking out. So as the rally's happening, I'm always looking for the time frame on the cloud that sort of captures the essence of the rally on the best way it can. Now, I don't know how to put this into words, but what you're looking for is the rally to be represented in a way that the cloud sort of hugs the entire drive. If you go onto, oh, sorry, let's just look at this live real quick. If you go onto even the 30-minute, you'll see how far away from the cloud price is. Hourly, it's super far away. So if you stay on a low enough time frame, usually it's the hourly. If it's lower than the hourly, that generally means that the rally is happening super quick, and it's going to be over super quick. That might not happen this time. I don't know. We'll see. But we'll know, I think, within 12 to 24 hours if this is going to continue or not. So anyway, we're on the 15-minute because I'm looking for the best way to capture the rally. So I annotated this, and let's go through it. And again, if you look at my pinned tweet on Twitter, let me just pull it up real quick. So everything I have to say about the current rally is going to be the same as this pinned tweet. I'm not going to talk about RSI because on low time frames it's generally just noise. 30-minute and hourly are definitely better as far as signals are concerned. But 15-minute is just really super noisy. So again, sideways, breakout. Then you have to start making decisions. Do I want to be long right now, or do I want to wait for the pullback? Where's the pullback going to be? Well, it's usually at the Kijun, which is a 50% fib. Then what do? You stay in the trade until you get a TK cross, which was somewhere around here. You get a TK recross, you reopen, and you just hold it until either a TK cross again or some other parameter, whatever your stop system is, okay? And as usual, I'll put everything in the description of this video if you want to look at it some more. So back to the current rally. Again, same thing. Same exact thing. Like not even any variation at all, okay? Sideways nothingness. You can generally feel sideways nothingness by this like creeping feeling of I should be in a trade, everybody's in a trade, people are taking positions, what's my trade strategy going to be, okay? Or you can just, you know, look at Bollinger Bands, that's another way. But emotionally, I think a lot of people feel the sideways and feel anxiety, depending on the person, obviously. Then we had this breakout on volume. So I'm saying this is when the rally's starting. The cloud is telling you that, the volume's telling you that, the price is telling you that, everything's telling you that. We're above the cloud. We have eventually get a bullish TK cross a few hours later. So I'm saying at this point right here, when it happens, you can either enter a trade manually because it's either going to continue, which it should because it's the beginning, which you should assume based on this sideways nothingness, okay? Or you can wait for your bids at the Kijun at 50% fib. Either one. Doesn't matter, honestly. You're probably better off waiting till it hits the 50% again, but it doesn't always hit the 50% fib because especially at this point in time, you're not sure which time frame is going to best capture the trend. So it's up to you. Obviously, this is easier to annotate all this retrospectively, but again, if you look at this chart, it's the same exact thing. So Kijun hits your bids or not, you're already long, doesn't matter. Then we get a TK cross. And your option always is to close whenever we get a TK cross. Whether or not you do, because this is the beginning, is completely dependent on your leverage and your purse and whatever your risk profile is, okay? So let's say you do close, that's fine. Let's say you lost money here. Okay. The bias is still long because you're above the cloud the whole time. So TK recross happens above the cloud, which is the strongest signal for bullish continuation. So that's why I'm saying bull extravaganza expected. You can say that there was some sort of TK bullish cross here, but really it's kind of like on top of itself the whole time. I don't really know what to call that, but this is definitely better when when you get a cross recross above the cloud. It's game time again. So that's when I manually enter if I'm not already long. And again, you're just holding this whole time until the TK recross happens. And if you're not in or you get out, you get stopped out for whatever reason, I'm saying you always put your bids at the Kijun. Kijun bounce is where, if it's a bull trend in a bull market on this time frame, it will bounce from that zone pretty guaranteed at a high probability. Why is that? Well, it's a 50% retracement of whatever the previous captured movement is. So this sort of draws fibs without you having to draw the fibs, which is why I like using the cloud. So you're holding on low time frame. Maybe you get stopped out on this crazy candle. Maybe you don't. I should mention this is weekly future. I'm only charting this because there's enough volume and price action to warrant a chart on the 15-minute. But if you look at Stamp or some other exchange, there may or may not be a good enough chart to figure out what's going on. So luckily for Bitcoin, there's like 8 different charts you can look at any given time. So if you're stuck on Bitstamp or whatever, you can always look at another chart that's quote-unquote driving the market, such as China or futures or whatever you want to look at the time being. So you got out here, maybe you did, maybe you didn't. You should have if you didn't. Just based on 15-minute cloud principles. And what are you waiting for to get back in? You're waiting for, again, just like here, cross recross, you're waiting for cross recross here. Whether or not that'll keep going, it's obviously at a lower probability on this time frame that it'll keep going, just because all this action already happened. Doesn't mean that it can't, obviously. Looking at the higher time frames, like keeping this in mind, you know, we're headed 850 plus, so I think it's safe to say reopening a trade on the TK recross on the 15 is pretty safe. The other thing to pay attention to is the 3 drives principle. We've sort of already had 3 drives Bitcoin loves to make 4 or 5 drives before it pulls back, which is why you always see me calling bearish targets after 3 drives, and then it keeps going, and then everyone's like, oh, it didn't happen, you suck, and then it does, and I was like, oh my god, you're great. Bottom line, yeah, I'm gonna open a long if I'm not long here, just based on the TK cross. So now we switch gears to just high time frame stop management. I got in at 726 on one broker somewhere in here, I guess. The whole reasoning behind that was just the support zone looked really good, so I'm long. So all I'm doing is using Williams fractal on TradingView, the indicator. Anytime it makes a high, low, high, it puts a bearish fractal on there, and the argument is that we shouldn't be breaking, let me take this off, we shouldn't be breaking bearish fractals in a bull market and a bull trend, okay? So all I did, just move my stop up 740, 750, it's somewhere at 760 right now. You can see all that one broker, I'll leave the link in the description. I recorded this before daily close, which may or not be a mistake, we'll see. Daily close is around 7, 8 o'clock, somewhere in there. So you can expect probably some action around daily close, just because it's a big candle. Anytime a big candle closes, stuff happens. So again, low time frames, what are you looking for? TK cross. If you're out of your long on high leverage right now, that's a smart place to be, in my opinion. If you're in a long high leverage, your stop should be around 760 on spot. Other than that, just ride the wave. If you're completely out, watch for the Kijun bounces on whatever time frame best captures the rally. So as usual, like, dislike, comment, subscribe, hit me up on Twitter, Telegram. Happy trading.